Yeah, well, welcome back. And today, actually, our guest, we're really excited about having Mark Ting, founder / partner at Foundation Wealth, but also CBC's On the Coast financial correspondent.
I wouldn't call you a correspondent.
Guide to personal finance.
Guide to personal finance, right. Well, thanks, Mark, for taking the time. Appreciate you coming out.
No problem.
It is, it's so great to have you here. We've pitched this as stocks versus real estate.
Okay.
And we're
not gonna ask you that yet, because
Battle Royale.
Yeah, exactly.
One enters and no one else leaves.
Stocks left. But yeah, no. Can you tell us a little bit more about yourself? Like, how did you get? Because you, first of all, to be the guy that everybody listens to on the drive home is kind of an exciting position. Can you talk a little bit about how you got to be the guy that everyone turns to for financial advice?
Wow. Okay, that's never been called that before, but people do turn to me for financial advice. They email me, Twitter, whatever. I just started like anybody else. I had a job. I was working at Van City. I progressed quite well at Van City, and then this opportunity came where CBC approached everybody, Van City as well as the other banks and everybody else, and they said, we're looking for this type of person to speak on the radio. And they wanted somebody who could sort of talk about finance in an interesting way without boring people and not too many numbers.
Did you nominate yourself?
No.
Or were you nominated?
I was nominated. There was two of us. It was almost like a reality TV show. So from Van City's perspective, they put two horses in the race. And the Van City PR people ended up interviewing both of us, and based on personalities or whatever, they chose me. And then I went to CBC, and there's like 14 of us. And 14 of us, we did calls, we did talks, and then they narrowed it down to 4.
Wow.
And originally, I didn't think I got it because I thought I screwed up really bad, because I did my first interview, and then I had a second interview with Stephen Quinn, who was the host at that time. And
kind of an intimidating figure, actually.
He was, but I couldn't talk to him face to face because I was on vacation. So I was actually in a Soyuz, board shorts, drinking beers, and I had to get on phone with Stephen Quinn, and he was talking about RESPs or something like that, and I called him Steve, which he hates, and he just like, okay, thanks, and hung up. And I was just like, no, okay, we'll talk to you later. Nothing, just hung up. So I just thought, okay, well, I screwed that up, and I'm going back to my water skiing, and a couple of weeks later, my boss calls me up. We're talking about something completely different, and he asked me about the CBC thing. And I was like, don't count on that. That's gone. And then literally 2 seconds later, CBC called me, and they said, we'd like 4 of you. 4 of you need to come in, and we don't know who to pick. You're all great. So at this point, they brought me in to the studio, and I spent literally 3 hours with one lady doing a mock interview.
Not Gloria Mac.
No, this is well before her.
All right.
To one of the producers, and she asked me the same question over and over and over again. She was just giving me tips. Don't talk too fast, don't do this, don't do that. And then right at the end, she just switched it. She goes, you know what, this is a true question. I'm thinking about putting my name on my parents' bank accounts because I heard that saves probate tax if they die. Is that true? And I just answered that question, and then she just stopped. She goes, that was awesome. For you, don't think. You're perfect, just don't think, don't prepare. That's your flaw. Just go out there and just wing it, because that's when you're best. And I was like, great, I got the job.
Proving it tonight,
I didn't get the job. They put us all on the air, and then they ended up picking me.
Interesting.
Well, maybe we should, this is a great start, but we should talk about what we were trying to do here tonight at the Vancouver Real Estate Live. First of all, there's 15 people watching the show right now.
Welcome.
We already have one comment from Zane, who's stoked to learn some real estate tips, which is really exciting. Really what we're trying to do here is engage with some of the folks watching at home. I'd like to think we know a thing or two about real estate. One thing I know for sure is Mark Ting is an avid real estate investor. And you know a thing or two about the stock market, which is why we pitched the show in those terms that are maybe a little more polarizing than they should be.
Okay. Yeah.
But so if anyone has any questions, we got a question. Vegan Kev, I feel like Vegan's Kev is back. He's been here before. Yeah. Vegan Kev has been here before. what are you guys sipping on this evening?
Oh yeah, we should talk about the beer because Secret really has dropped the ball a lot these past live episodes. But tonight he showed up with Parallel 49.
Yeah.
I've got the craft pilsner. You got what do you got? The pale ale.
I've got the pale ale.
And
Lager.
And you got the
Mark,
lager.
I talked to you a couple weeks ago and I said, what do you like to drink? You said lager.
Yeah, I like the lager. Keep it simple.
Secret performs
Yeah.
again.
This is actually. Have you been to the Parallel 49, the tasting room?
I've been to the one that's down the street here. The red, is it Red Truck?
Yeah,
Yeah.
Red Truck. But
I've
then
been to
there's-
that one.
Parallel 49, I think, is over on. It's in like Hastings Sunrise. It's actually. I remember. It's got a good outdoor space.
I don't think I've been to it.
Really? Oh, anyways, it's a great place. Shout out to Parallel 49.
Yeah, absolutely. But let's start. Well, we're getting warmed up here. I think we always like to start this with a bit of a market update.
Yeah.
And Adam, what are you seeing out there?
So I mean, it's really clear right now about the inventory being down again. Like we talked about last time when we were live, inventory last month for January is 20% down from our 10-year average. And not only is the inventory low, but it's more so that there's nothing good to buy. There's very few what we would consider like tier 1 or A properties. And that's the challenge right now. So when a good property is listed, there's a lot of people that are interested in it, especially in that sub like $1.2 million price band right now, which seems to be very active. So 1-bedrooms, 2-bedroom condos in the Vancouver area. And then also we're seeing a lot of activity in the entry-level detached markets as well. A lot of interesting stuff around FOMO right now where like we're just noted like multiple offer Monday seems to be back, which is crazy. Where it means, like on the weekend we're seeing stuff and then we're writing offers on Monday. Several offers.
A lot of people holding off
right
on
now.
offers right now, that's for sure.
I've had a lot of listings that have gone into multiples, 7 or 8 offers right now. So it feels really, really busy out there right now. And it's just, I guess the big question is, will inventory show up this spring? I also want to say, like, it's early February. Typically the spring market doesn't start getting going until the end of February. But we seem to be quite busy right now for how early we are on in the year, right?
Right.
So.
Well, one thing that I was actually kind of surprised by, based on what it felt like in January, and maybe it was, I don't think it was just our businesses. The stats actually weren't quite as positive because we had like a barn burner December. In January, the stats seemed like the sales ratios were down from December, but December was kind of crazy. But February feels like if anything, we're ramping up.
Yeah.
Here's a question to anyone out there watching that either is involved in the industry or is watching closely, trying to buy, trying to sell. Is the verdict in for the spring? At this point, do we know if the spring market's showing up and it's going to be going like it has in past years?
So do you think that it's going to be a busy spring?
Let's put it
That's the question.
another way, and I'm going to ask Mark this question. If you were looking to buy this spring, would you buy now or in April or May?
I think it's going to be a busy spring. I think the momentum's really there, and it's ramping up. Prices, if they start ticking up, then we'll probably see more people listing. That's just the way things work, supply and demand. You've heard this from me before. It's not a matter of timing for me. It's a matter of the deal. So if I find a good deal, whether it's a buyer's market or a seller's market, then I'll generally go for it. But typically, I mean, history has shown I tend not to buy in seller's market. I like to have the stats and everything on my side. So if I was an investor right now, I'd be pretty cautious. If I was buying for myself and I really wanted a place and I needed to live, I'd be making offers. Like right now into the spring until I hit something that worked.
So if it was you were buying your principal residence, you'd be out there and you'd be
Yeah,
active.
there's no point in not.
Yeah.
I mean, you might as well start looking whenever you're prepared, whenever you're pre-approved and you sort of know what you want. I figure often your best chances happen at not the typical moments. Like I've bought in Decembers and I've bought in the middle of summers. So I want to see what's out there, and if something I like is there, and then I'll make an offer. Probably I'll get rejected though. That's just the way I do things. I make offers and I get rejected.
You should talk about Mark's philosophy on
like high
real
school.
estate investing.
It's a numbers game.
It is a numbers game, yeah. And I'm very strict. I very strict with my philosophy. I try to keep emotions out of it. Hard to do if you're buying for your principal residence, though.
Right.
Easier to do with investments.
Can we talk about? I'm just curious because a lot of people look to you for financial advice. We know that you are an avid real estate investor. You're always looking for an opportunity, and sometimes some pretty crazy opportunities. And we've had you on the show for those as well. But can you talk a little bit, like unpack your philosophy? Like, how do you approach real estate investing?
Before you do that,
Yeah.
Mark, we have a question from Da1992.
Okay.
He says, first-time buyer here. Want to buy in the city of Vancouver. I can afford the $450K range, but that'll get me a crappy one-bed. Should I continue paying rent and wait until I can afford to get a two-bedroom, or get in now and then sell when I want that two-bedroom in 5 or so years when I have kids? Interesting question.
If it was me, I would probably maybe not buy in Vancouver.
Yeah.
I might buy in Surrey Central or somewhere else like that. I'd rather get in where I can, and if I'm close enough to SkyTrain or transit where it's doable for my work, I'd rather just get into the market. 4 or 5 years from now, there's a good chance that condo markets will go up. Because there's probably going to be there's a decent amount of supply coming online for the next couple of years, but after that, there's really not much.
Right.
And it takes about 6 years for a big development to actually get started from the beginning to the end.
Right.
So a lot of developers aren't doing that just yet. So I think there's going to be a pause. So if I was a first-time buyer, I'd still try to get into the market, just somewhere, maybe not Vancouver.
I agree with that 100%. And I think the other thing is, depending if you're renting or not, right now, like money's so cheap, you're basically with mortgage pay down alone over the next 5 years.
Hold on. Da1992 wrote a message that I was going to read and then redacted or retracted his message. Anyway.
What was the message?
Yeah, we got this good.
Yeah, well, no, I'm not going to repeat it because
okay.
I think his partner might be in the room.
Oh.
Okay.
All right. Anyways.
Someone's not allowed to move to Surrey. That's the gist of it, I'm guessing. So I changed my answer.
Okay.
Do what your wife says. If it's a wife, partner, I don't know.
Right. No, but I mean, I think that's the big thing is like, even with mortgage pay down alone, right? If you're over the next 5 years, I would actually get a mortgage calculator out and look at the amortization chart there and just see how much you're going to actually build in terms of equity in something that you buy. And I agree with Mark. I think look at other markets that you see opportunity, and you don't have to buy in the city of Vancouver, but I would consider about buying close to a SkyTrain somewhere else in the Metro Vancouver area.
I feel like the 3 to 5 year window, I'd feel quite confident that you'll be sitting well after 5 years if you buy in the city of Vancouver, but it doesn't seem like that's necessarily a long enough window for what he's talking about, to trade up and actually necessarily feel 100% confident that you're going to do well.
Do you mean so you're arguing that he shouldn't buy, or?
No, I'm saying he should look
Elsewhere.
further out.
I see what you're saying.
Yeah. So then if circumstances change, clearly his life circumstances, he plans on changes, say 4 to 5 years from now, that's not a long enough period to ensure that one bedroom in the city of Vancouver is going to perform, right? Vegan Kev, I'd just like to say, he's got his own opinions, and then we're going to get to Garrett Hill. Vegan Kev says, I'd wait till spring once Vegan Kev's not responding to Da, though. He's responding to the larger question. I'd wait till spring once the inventory opens up. There's not a lot of great options out there from what I've seen. So buy now, wait till May. Garrett Hill also, Da1992, I was just clarifying that I'm a she, not a he. Ha ha, all good.
Okay. That makes more sense.
Oh, this totally makes more sense. My bad. Okay, so we got another question from Garrett Hill. I'm a new grad that just started my career in engineering. I badly want to build a real estate empire so I can quit my 9 to 5, but don't have the money for a down payment. How do I get started? Well, we got the guy in the room who's actually partnered up quite a bit on deals. Thoughts, Mark?
That's a tough question, like the down payment question. It really depends on, he said he's a recent graduate, is that right?
Recent graduate in engineering.
So hopefully he doesn't have too much student debt, and hopefully he can save. So that's a good thing. You need the job, you need the leg, you need sort of like structure so that you got a job and it's continuous, then you start saving. Typically you save slowly, like depending on when you think he can buy. If you think he can buy, maybe his parents are going to help him out in a year or two, you don't really invest too much. You keep it really simple, you just keep it in the bank, maybe take a little bit of a risk with some mortgage products that will pay you like 5, 6, 7%, nothing beyond that. And then just go from there, grow it from there. If he has a longer term, if he's like 22 and he's planning to buy at 32, then you'd probably want to put a little bit more aggressive portfolio together.
Would you buy your principal residence first, or would you buy an investment first, or does it depend on the circumstances?
Yeah, it's like back in 2012 when I bought my first like apartment block in the States, and I could buy doors for like 40 to 50 grand US. That paid me $600 a month.
Yeah.
All day. Like if I had to choose between buying my house in Richmond or whatever and taking that same amount of money and buying all those doors over there and just cash flowing and watching that grow, because you knew it was going to bounce off the bottom. Like doors, based on those cash flows, it's so underpriced. Then I would definitely go for that deal. And then essentially what I did with that is after 3 or 4 years, I cashed out, made a good chunk of money, and that's how I started my business. So it's like just moving from one investment to the other.
Right.
But someone, if they didn't have a business, then they could buy their principal residence.
Right.
So real estate can work. It doesn't have to be all Lower Mainland. Could be, Surrey, like we mentioned, could be in the States. You can make those things work and then cash out at some point when it's advantageous to you, because markets will go hot and cold.
What are your thoughts for someone? Sorry, I forget the
Garrett Hill.
So someone in Garrett's position who maybe doesn't have the full down payment by himself. What are your thoughts on partnering up at this stage to buy an investment with someone?
Like friends and family.
Friends and family. I know you partner up a lot.
Yeah, but I partner up with people who have very similar rules, goals, time horizons. If he's a new graduate at 22, 23, his life is going to change so much in the next 5 years, girlfriends, boyfriends, marriage, kids, whereas my life is boring, like somewhat boring. I'm in my mid-40s.
You're predictable.
Yeah, I'm predictable. I know what's going on. Like I got
we
the
know
house,
you might
got the
have
wife,
one
got the
more
kids.
of those, then you're going home to bed.
Well, I predict more than one.
Yeah.
But life circumstances are completely different. So I'd be very cautious about who I partnered with if I was 22, 23, because spouses are going to get involved as well.
Well, the other challenge is, as far as the people that I know that have partnered up successfully in real estate early on without money, is they bring something to the table. And I know we were talking previously about a deal that you're involved in where somebody brought the deal to you, a good friend of yours, didn't have capital, but knows how to do a lot of work when it comes to renovating. And I think that's a challenge with Garrett, who's got a 9-to-5 job, maybe not the capital to invest. You have to bring something to the table, right? And a certain skill set, a certain amount of time. And if you don't have those and you're trying to build your career, it's pretty challenging.
The only other thing I'd say to Garrett is it's actually not a bad time to talk to a mortgage broker and kind of figure out what you need and kind of set your goals around down payment and just figure out what you need to kind of get there to get your first property as well. Mortgage broker can help you with that. So actually our mortgage broker can help you with that. So feel free to get in touch, Garrett.
Tingers M says, hi, Dad. Is that...
what's his name?
Tingers?
Tingers.
Hey, Tyler. What's up?
I thought that was somebody making a comment on how old I looked.
It could be my daughter, but I'm guessing it's my son.
So we should actually pose a quick question for the room though, because we are talking about stocks and real estate. So, Secret, if you could add this to the chat, stocks or real estate, and just curious to hear the room's thoughts, and then maybe we should pose that question to Mark Ting.
Stocks versus real estate, you decide.
I want it all, and I'm serious in that.
Yeah.
Like. To me, it's not all or nothing. Like, there's no way I would give up my real estate investments. They've done extremely well for me. I intend to keep them for forever. But most successful people I know diversify. So
Right.
very few people will keep only real estate, or very few people will keep only stocks. So an analogy that I generally use is there's a reason to have both as part of a portfolio. So I sort of think of it as a hockey team. So the stocks, or the private mortgages, the sort of safe and steady stuff that I know will be there for me, is kind of like my defense. But when you build a hockey team, you're not going to build it full of defensemen. You want other things that do different things. Like you want some stocks that can go up 30, 40, 100, 200% a year, but also cause problems, and they might go down a bit. But that's fine, because generally your defense bails you out. So I generally think of it as, I want both. I want different types of stocks. I want different types of real estate. I don't want to all have my real estate in one place. I don't want all condos. I want all different things. So the more sort of pieces you have of your hockey team, the more you can depend on, probably the better success you're going to get. And I want it at a good price. I got to keep underneath that salary cap.
I love that analogy for. So real estate is basically in your portfolio. They're the defensemen.
Yeah, part of it. I mean, it's an offensive defenseman. I wouldn't
Right.
call them super defensemen, because I got other things for that. Because real estate does go down. You're crazy to think. People always say that real estate
Yeah.
never goes down. It goes down. Talk to anybody in the United States. There's lots of people who have lost real estate in Vancouver. Anybody who's bought in the West End over the last 2-3 years, they've lost, millions of dollars. So it can go down. But I would say real estate is sort of like an offensive defenseman, particularly if it's cash flowing.
Mm-hmm.
Were you surprised? This is just a question here. So real estate does go down. You personally capitalized after 2008. And we should say there's 22 people watching.
Yeah.
Welcome
everybody.
to the room. Love to hear your thoughts on stocks versus real estate. We're going to get back to that. But you did exceedingly well taking advantage of the crash after 2008. When everyone was talking doom and gloom here in Vancouver, what were your predictions at that time? We might have even had you on the show, but were you surprised at kind of what seems to be a very quick rebound?
2008, actually, I let go a couple really good opportunities. I gave them to my neighbor. I had a parcel of land in Steveston that we were going to subdivide, and it cost like $500,000. It was so cheap. And then they built 2 houses on it. But because 2008, because of my stocks and everything else, they were down as well. I actually sort of walked away from it. Gave it to my neighbor, and he did phenomenally well. So he took the chance. He did really well. I really started doing well after the rebound. And rarely, that's how generally it works for me, because I'm a risk manager. I never get the bottom, I never get the peak, but I like to see where the trend changes. And I saw the trend change, and it started bottoming and started going up. That's usually my sweet spot. And then I'll look at other variables. Like I went hard into the US at that point, and the Canadian dollar was above par. And I saw that as a huge benefit. So I'm buying these US properties when my Canadian dollar is stronger than the US dollar, and I saw that as an overvaluation, and then just the prices and everything else. To me, it was the first time where I really went all in, and I took a really big gamble. And if you talk to Warren Buffett, he's very, very prudent, but when the numbers totally make sense and the risk is so low and the reward is so high, he goes all in. So he'll make these big purchases. And that's what I did. I literally borrowed from everything I had, equity I had. I borrowed from my neighbors. I brought them in on the deal. I borrowed from my parents, and we went in on that deal, and it set me up. I mean, it really helped me out. So sometimes, yeah, you got to go in all in if it makes sense.
Where were you buying in the U.S.?
So Tempe, Arizona,
Yeah.
which is right next to ASU, which is the biggest university in America. So you could walk there. It's a super big party school, so right next to like the party street, really close. And on the cheap end, I was buying places for $40,000 a door, and they're renting out for about $600 to $750.
Wow.
And then we bought some other ones, nice places. I'm not a slumlord at all. I'd call them like B-type properties with pools and air conditioning and everything, because I really don't want to do the lower end. I rather get sort of that sweet spot, because I'm all about leave me alone. Like, I'll supply you with a good, comfortable, decent place, and you live there, you pay me rent, and you basically don't bother me because everything's good.
Yeah.
Right.
So there's 25 people watching. It seems like it really spiked when you talked about the big risks. People got interested. There's a couple answers here: stocks or real estate, best investment. Mo says stocks provide more liquidity and easier to adjust portfolio to changing conditions. Real estate principal residence is priority, then maybe a good deal for another property. I think that's a throwback to the principal residence.
Yeah.
One question I had in just thinking about stocks versus real estate, a lot of the people we have on the program, we're big fans of real estate, and a lot of the people we have on the program are big fans of real estate. Leverage is the thing they talk about in real estate. What do you have any sort of like pump the brakes on leverage, or are you just like, no, leverage? Yeah, that's the best part about real estate. And
I like leverage. I use leverage. I use other people's leverage. When it makes sense and it's cash flows, you buy as much as you can, because you just magnify your returns, right? So most of the houses, places we've bought in the last while, 100% leverage, no down payment whatsoever. But in order to do that, again, it always goes back down to the deal, and it also forces you to get things done. So because you have to get those things rented out really quickly and with good tenants and get them cash flowing right away. So you always need a buffer there. In terms of leverage on the stock market, I rarely recommend that. I rarely tell people to borrow 100 grand, 200 grand and invest in the stock market. And part of it was that liquidity thing that he said. People get extremely emotional with the stock markets if, like at the beginning of the year, people were talking about World War III, they're freaking out. Coronaviruses now, people are freaking out. And they tend to freak out. And because of that liquidity, they'll sell low and they'll buy high. That's the whole FOMO thing. So I've learned, like, if you're pragmatic about it, leverage should work really well in the stock market, but I just know people. It's human nature to freak out and buy and sell at the wrong time. Hard to do that with real estate. They'll usually ride it out, and as long as they're getting some cash flow going through, they'll stick it out and they'll just wait till things recover.
It's great to be able to sleep on it.
Totally. I'm all about sleeping. Sleeping is so important.
Me too.
And you learn about yourself. Like I've done a couple flips where I've built houses and flipped them, and I lost sleep over it. I hated it. I hated not having that cash flow and just seeing money going out and waiting for things to go. And I've learned about myself, the type of investor I am. I rather find the deals and get that cash flow and set it and forget it.
That's such great advice to know what type of investor you are and know where you're comfortable and where your strengths lie.
And you got to go through a lot of it to get there to where you're comfortable with yourself as an investor.
You never know until you do it.
Exactly.
And people always have good intentions. They'll come to me. It's like, oh, I'm not going to touch this money for 5-10 years. And then all of a sudden a virus comes up and like, oh, give it to me back, right? And I was all right, you just said this. So that we have to adjust, and that's the risk tolerance thing.
Thomas Lamb writes, welcome Thomas, historically real estate and stock is a good investment for the past 50 years. Do you think this will hold true in the future?
Yeah, inflation. It's all about inflation. I mean, everything's being inflated right now. Inflation in the stock market, real estate market, things are going up. And they're pumping out a lot of money. Like there's quantitative easing, which is basically central banks around the world creating money out of nothing. And that has to go somewhere. And it's going into assets. So it's just like, I'm renovating this house right now. This is a good example. I'm renovating this house. And in the last weekend, I was changing over all the plugs and the switches. And I'd take out an old plug and I'd turn it around. It was like from Beaver Lumber, and it cost 34 cents. And I'm replacing it with something that costs $2 or something like that. That's inflation, right? 50 years from now, and that's 40-year inflation. So of course, everything's going to be worth cost a lot more in the future just based on that.
I was renovating a house 5 years ago, and we opened the wall and we found the receipt for the whole lumber of the house from the 1940s, and it was $1,800.
Yeah.
It's crazy, but yeah, you're absolutely right.
And my parents' house cost, I think, $30,000 in 1973.
30,000, yeah.
So
exactly.
I'm curious to hear what the room thinks about that. So historically, real estate and stocks have been a good investment for the past 50 years. Do you think this will hold true in the future? If you have any ideas. I mean, one of the things I think of often is, the strongest strategy for losing money is keeping it under your pillow.
Yeah, it doesn't do anything. You're guaranteed to lose money because of inflation.
Yeah, that's exactly it. And if you're not listening to our podcast, I said this to somebody today, and I think I said it to you before. Out of any podcast, if you're excited about the future of Vancouver, any podcast we've done that makes you very excited about the future of Vancouver, I should say, is Chief Planner Gil Kelly.
Yeah, that was a great episode.
He's an urban planner. He's worked in San Francisco, Portland. He's been in Vancouver for 3-4 years. He thinks very big picture about the future of cities, the future of West Coast cities, the future of with the climate crisis and everything else, and refugees, and the way his idea of where Vancouver is 50 years from now. I would expect that you listen to that. It's hard to come away thinking Vancouver's a bad investment.
If you just bought something and you're nervous, that's your warm hug.
I listen to it every night.
Yeah. I want to actually, just quickly, just because if you are enjoying these events, we do ask you to please subscribe at the bottom, and of course give us a thumbs up if you like what you're seeing and hearing. And we appreciate everyone joining us. Secret, if you could just add this to the questions here. Where would you buy right now in Vancouver is a question we'd like to ask the room, and if you can provide a reason why.
And we know where you bought right now.
No, I'm going to add something to that comment that you made about the worst investment is keep it in the bank or underneath the pillow.
Yeah.
That's completely true for mid to long-term money, but for short-term money, you keep it in the bank because essentially you're paying for flexibility, and sometimes you need that.
Right.
Long-term, do something with it.
Right. Fair point. Fair point. So while everybody's thinking about where they would buy, I mean, me and you spelled out where we would buy. I think that's kind of something we've done on the podcast fairly recently. Mark, where would you buy?
So I've bought fairly recently in Mount Pleasant, and I bought it for a revenue property. But if I'm going to be completely honest, and I've talked to my partners about this, I bought it for a personal reason as well. So I'm thinking maybe 10, 15 years from now, I might live in there. So I just wanted some flexibility. So for right now, I see a lot of upside in single detached, sort of on the lower end. And this place is a duplex. So I think there's a lot of flexibility there. But I also think I want to live in there. It's a phenomenal neighborhood. If it was for an investment, to be honest, right now, if I was for a home, I'd probably be thinking on the cheaper end. Surrey Central, I think there's upside there, but I would probably be looking at industrial right now. So what's happening is you got this big project in Burnaby by the river, and for the first time in Canada, it's like a 2-floor industrial. So you're gonna have trucks going up on the ups and the down, and that's never happened before. And what we're seeing is there's a race for convenience. So you got Amazon downtown. And what's happening is if you go to New York and some of the other big cities, they expect 2-hour delivery. It's not just one day anymore, it's like 2 hours. And for them to do that, they have to really be close to where the people are.
Yeah.
So they're not buying in the sticks, they're actually buying big chunks of land close to the cities. So what I'm finding really interesting is I want to see how this one goes in Burnaby. And then you would think, okay, that sets the precedent for these 2 floors with these trucks going inside first floor and second floor. But there's often a spin-off effect. If I have industrial somewhere else, and it could easily be zoned for that same thing, and you could see a massive lift there. And I see that as being a trend of the future.
Interesting. Okay, we got Zane has a question. I have a property in Toronto but rent in Vancouver. I don't necessarily want to own a place in Vancouver, but should I buy now as a better investment strategy?
That means selling in Toronto?
Does that mean selling in Toronto?
I don't think I'd sell in Toronto.
Or,
Yeah,
wait, Zane also says, or should I buy in LA, which I've always thought about, or is that nope on American purchasing?
No, definitely not nope on American purchasing. Maybe nope on LA.
Let's put this, LA or Vancouver?
Investment property, I would be more of the Sun Belt, like Texas and various other places like that. LA, I don't know enough.
Yeah.
But I deal with people who invest literally billions of dollars in real estate, like on big apartments. Not that many of them are buying in LA. They're buying in other parts. So they're buying in Georgia, they're buying in Texas and various other places. So I would probably go with them. They're smarter than me. So I'll go on their coattails.
Okay, regarding real estate and stocks, this is a comment from Dill. Regarding real estate and stocks, would now be a good time to cash out, take profits, or do you think that everything bubble continue inflating in 2020? I'm betting on the everything bubble.
I rarely take I take profits. I trim profits, but I rarely go to cash. I don't do a swing. That's to me, that's betting. That's not investing. So if you're a long-term investor, I would keep doing what you're doing. You might want to definitely take some profits and maybe invest in things that are more cyclical, like more defensive, because valuations are being stretched. But just the trend is there, and you're basically fighting the central banks if you're going to cash. The central banks are pushing asset prices higher. You got a president in the United States who wants to be reelected. He's going to do whatever it takes to make the stock market do well this year. In China, they're doing tons of stimulus as well to counter the coronavirus, which will have an effect.
Sure.
But those are levers that are being pulled. So I think valuations are pretty stretched. It wouldn't surprise me at all if we saw like a 10, 15% pullback. But if we did, I'd be more inclined to be buying at that point.
Okay, and there's 27 people watching here right now, so welcome everybody to the room. I just want to touch on real estate, Adam, because Dill said regarding real estate and stocks, would now be a good time to cash out, take profits, or do you think the everything bubble continues to inflate in 2020? We definitely have, I think that's a very smart kind of trim the profits.
Hard to do with real estate, though.
Yeah, that is definitely hard to do in real estate, but what I'd say is, I don't know, Dill, if you were in the room when we first began, the first 2 months, we haven't seen the stats in February, but I think it's fairly evident on the ground here.
It depends. Yeah, it depends which price band you're in. But we feel like we're in a bit of a jumping market right now. So you want to sell. That said, you want to sell in a rising market. So depends how long you've owned the property.
Where was the house? There's a house that has an accepted offer right now. We don't know the accepted offer price. A colleague of ours. A Vancouver special. It was a standard lot, nice Vancouver special, renovated.
In the Fraser area.
In the Fraser area.
2.4, and they've got an accepted offer.
2.4.
But I think it just goes to show. But we were just talking about a house on the west side where they had the agents open and 160 groups were through, and the agents open.
Really nice house, though, for
not even the
180.
open house, right? So, but I mean, it depends, and I mean, we're dealing with multiple offers all the time right now. And on our listings and with buyers, there's a lot of activity out there. So I would question where you own and what you have to sell.
Where you own,
how many properties you own too.
Exactly.
Yeah.
Exactly.
Yeah. Another.
And your tax situation, which we're going
to
get
variables.
to. Corey Brooks says north end of Mount Pleasant near the upcoming SkyTrain.
Yeah. So over where Canvas and Red Truck.
Where would you buy? Yeah, where would you buy right now? I forgot what the question was.
That's a great. We just in our last, I think it was our last episode, we talked about up and coming areas, and that's one of the areas that we're most excited about from the Broadway subway line for sure.
Mm-hmm. Yeah, I wonder because Corey, and if you're still here, there's 27 people watching right now. North end of Mount Pleasant, I often think, literally the building Canvas is right there.
Yeah, it's center ice for basically the Northeast Falls Creek plan, and also for the Broadway subway line. So, and the hospital.
Yeah, and it's a newer building, a couple years old, still under warranty. It's the SkyTrain's going in right there, right beside Emily Carr. It's going to benefit from all that stuff. I mean, it's a new wood frame building. Ani is the builder. That building always is on the radar.
You'll be competing with Matt for units over there.
Yeah, I don't want to put too fine a point on what I'm looking at. It's Canvas, Unit 203.
You could also look at future development. So now they're talking about 6 floors being wood.
Right.
And I've heard rumors of that going to 10. So there's opportunities. You could buy a place and sit on it for a decent amount of time, and even in the Kits area, where they're zoning that, and you can still get some cash flow. It might be negative at the beginning, but if you have the partners, you have other people who can help you develop that, changing those 2 floors to 6 to 10, that's a massive lift.
Yeah,
totally.
Take time though.
Ramey from Ramey Films, who we should shout out, we're live at the Bento Box. We'll be very excited to hear Corey Brooks's next comment here, because when I said Canvas, he responded, Yes! Exclamation point. By Great Northern Way, there is some older live-work zoned properties.
And Ramey.
That's where we're coming from.
Yeah, we're coming live
from the
Pleasant,
bento box. RameyFilms.com. Ramey's doing some amazing work over here. We should also take the time, there's 27 people watching, to say, if you're finding this interesting, useful at all, and how couldn't you with Mark Ting in the room, give us a like. We really appreciate it. Subscribe. There's been quite a few more. Oh, DAW 1992's back. Now this might be, I know nothing about Abbotsford, but Noir Milsom is asking about the historic downtown of Abbotsford. I can't speak
Abbotsford
to that.
is a nice place. I mean, again, we should say we specialize in the city of
specialize in Vancouver, so that's a little.
So yeah, but I think that's the thing. I would look at it. It's an affordable market. It's a nice, accessible market, and that's a nice community for sure.
I think it's pretty hot right now, though, isn't it?
It is, yeah. A lot of, especially actually pre-sales doing quite well out there as well.
Well, people are looking for something closer to cash flow.
Yeah.
DAW 1992 is saying with Canvas, keep in mind, Canvas will have construction adjacent to it for 10 years, and the SkyTrain will take 5 years, and then all of PCI's development over the line.
Yeah, very true.
Yeah.
I'm okay with that, though.
I'm okay with that too.
I've changed my entire.
I live next to the airport.
I've changed my entire strategy.
That's so. Luke, we want to get to. You had an interesting story before we came on air about taxes and something that you just went through that you wanted to share. Can you tell us about that?
Sure. Yeah, taxes are. I think when you pick an investment property, like some of the main considerations that I look at are the city, how involved they're going to be in delays, and then taxes have to be. Like any investment, taxes are like one of the main things you got to talk about. And I was just talking to a client of mine, and we're doing some estate planning, and he was telling me about his plans, and we worked that out. But then we switched to his dad, who was 94 years old. And his father happened to own 2 pieces of property, and he lived in a condo that was worth $775. And we're like, okay, great. Lived in it. That's the principal residency exemption. That's great. And then we started going through some of his other assets, the father's assets, and as almost a throwaway, he talked about, we also own this other piece of land. It's like, okay, tell me about that. He goes, he bought it for the same day he bought his house, he bought it for $10,000. It's a large piece of land right on a lake. I was like, okay, so if you were to sell that today, how much would it go for? And he said $4 million. So after I picked up my jaw, I was like,
big whoop.
Wow, that's huge, but that will bring a huge tax liability, because that's basically your ACB, so your adjusted cost base of what you paid for it was $10,000, now $4 million.
Yeah.
That's a capital gain.
Yeah.
And it'll end up being like $1 million.
Yeah.
How are you prepared for that? And he's like, no, I didn't think it was anything. So I was like, okay, but let's look at it from a different perspective. Your principal residency doesn't actually have to be the place where you live. So if you have 2 properties, and he just so happened to buy them on the same year, which is great.
How much is the house worth?
$775 or something like that.
Okay.
So $775 versus $4 million.
$4 million.
Okay.
And he probably paid like $50,000 or $60,000 for this,
yeah.
and he paid $10,000. Not that it really matters at this point.
Yeah.
So buy waterfront, is what you're saying. But
30 years ago.
That's a big takeaway.
Yeah. So, but I was like, okay, in that case, I asked the questions. Is there a house on this? Is this a cottage? He said, yes. Have you ever rented it out? No. It's just always been personal use. I was like, that's good, because what happens is, if this doesn't have to be your principal residence, the condo, you can actually declare this one. Pay capital gains on this one, the $700,000 growth, and then you have the $4 million tax-free. So that's like one of those bright moments, like, holy crap, that's a game changer in terms of tax payable.
Right.
So he's gonna have to look into it, but essentially those are often the rules. You do not always have to put your principal residency on the house that you live in. You have another cottage and it grows a lot more. Usually that's the best place to do it.
Well, we said actually, I think it was last live, we talked about laneways being one of the best ways to get a cash flow property, or get a door, basically, right? For $250,000, you buy something that rents for, call it $2,300 conservatively in the city of Vancouver. You disagree.
I don't necessarily disagree, but I'd say there's a lot more. It's not that simple.
Right.
Laneways are expensive. Like $250,000 to build a laneway, that's That's expensive, man.
yeah.
Okay, that's another point, but they're pretty expensive.
So it's a
to build.
one-bedroom condo.
Yeah, but it's a little bit different. But the other side is you look at the tax part of it. So if you had a house and you had a suite in there and you renovated your house and there's a suite in there, you'd basically keep your principal residency exemption for that whole house. Mm-hmm. But if you actually have the house and then you sort of almost subdivide it, that's essentially what you're doing. It's almost like you're buying it and selling that piece of land to yourself or to somebody else. Actually, no, it's to yourself. But it's also now has a change of use.
So now you've got, say, call it 30% of the house that you have to pay cap gains on.
Yeah, so now it's different. It's no longer a principal residence.
Right.
There's conditions where it is. I think if your kids are in there, your parents are in there, depending on who you do it to. There's ways to maintain it.
But it's not an investment property.
It's not really an investment property unless you want to charge your parents market rate, which might not be the best idea. And your kids aren't paying that anyways, no matter what you try. So think about that before you make those decisions.
Right.
What do they say? A wise man once told me, it ain't what you make, it's what you keep.
Mm-hmm. And taxes are a huge part of that. Taxes are the biggest expense in your life.
Yeah. Vegan Kev's got a question. I love Vegan Kev is turning up and he shows up and he stays. This is great.
Here's vegan.
Yeah. So he's got an interesting question here. $500K, one bed downtown New West.
Ooh,
I like New West.
I like New West.
Yeah.
Or
I don't even have to hear the second.
No, you do. $500K, studio downtown Vancouver.
Oh, I'm
principal residence turned rental after a few years.
I'm buying downtown Vancouver.
I don't know.
Oh, come on, Mark.
Well, what kind of house can you buy? $500,000. It's got to be a tiny little place.
You could get a studio downtown.
You'd probably get 430 to 450 square feet without parking is what
one
you'd
thing
probably
to
get.
check in with your mortgage brokers. There might be complications with financing if it's under 500 square feet. I think I remember.
I feel like they've loosened that up though.
Have they loosened it?
Yeah.
Anyways, check with your mortgage broker on that one, and then also decide if you can live in a bachelor unit for the next few years.
I bought a half
question.
duplex, 4 bedrooms for $500,000 in New West, and I wouldn't give that thing up for anything.
Well, you know what the thing is about New West is
and it's really centrally located, perfect walk and everything.
But there's a lot of heritage buildings. Like it's fairly landlocked region. It's highly
New
desirable.
West is great.
So why is that bad?
No, it's all good.
Yeah,
No,
that's all good stuff.
I'm saying positive things.
New West is great, but downtown Vancouver is the center of it all.
Yeah.
I mean, this is
again, if he's single, one guy, that type of thing, then maybe. But
I would take downtown Vancouver.
Yeah, Vegan Kev, I'm a hard downtown Vancouver. Let's go, Ramey from Ramey Films. Oh, he's hands up.
What?
He doesn't know. Okay. And Mark, you're saying potentially New West.
If $500,000, I'd consider both. But I do know what I bought for $500,000,
and I love
it.
And you're not buying a one bed.
It's a 3-bedroom and a 2-bedroom downstairs. That's 6. No, I can't even do math. That's five rooms that you can be renting.
Curious to
that
hear
was a while ago, though.
what the room thinks. Would you buy Vancouver downtown or New West? Let Vegan Kev know.
Yeah, no kidding.
So double the space in New West. Is that fair?
No, I don't think you'd say.
No, you'd get a nice 1-bedroom in, like you get either a new nice 1-bedroom in New West, or you could get you get an older one in Den probably.
See, I'd probably go for the older ones.
The older one in Den.
Me personally.
Yeah. Interesting.
Yeah.
What does the room think? Because this is, I thought we'd all be on the same page here.
Yeah.
It's boring if we're all on the same page.
Yeah, I guess. You know what? It sounds like, to me, it's a livability thing for you more than it is investment.
I think it's more of a flexibility thing. So I rather have more room. So one small little bachelor party downtown, which is great. It's going to be appealing to a lot of people.
Right.
Compared to if I could get, it's hard for me to say because when I bought my place was a while ago, but literally I bought half a duplex with 3 bedrooms, 2 bedrooms downstairs for $500,000. And you could have a family in there. You could have 2 families in there.
Yeah.
Mm-hmm. So if I could buy, let's say, 1,000 square foot or 888 square foot 2-bedroom type thing, I kind of like that better than a studio, just because I got more people looking at it. Mm-hmm. And it is about half an hour to downtown, which is still in that zone, which I like.
Yeah.
So it's not too bad. You're not living in a tower though. So
Sure.
that's what I'm buying something.
Oh, hold
different.
on. They're weighing in. Irabella SA is with Mark, downtown New West.
Wow. And you know what?
That's crushing.
And Ramey from Ramey Films just piped up with downtown Vancouver. This is dividing the room.
Secret. Vancouver. Secret's
Secret's going
Vancouver.
with Vancouver.
Dill is downtown Vancouver, gets my vote.
Oh. We were waiting on Gil.
Dill. Come on.
Dill, sorry.
It's a good problem to have. So
No kidding.
yeah.
No kidding.
We get living either way. You're doing good.
Yeah. Yeah.
Okay, so
exactly.
Vegan Kev
Both great
actually,
options.
this is Vegan Kev spells it out a little bit. Yeah, see, Corey Brooks says downtown. You can rent to a rich tech worker and make money after. That's right. I agree, Vegan Kev. It's a tough one. There'd be two of us. Van City could have the best appreciation, but we love New West.
There's two of you and a bachelor.
You know, they
do
always
you care
say
about your relationship.
Yeah.
That
That
maybe
actually
you want more
complicates
space.
things.
That does complicate things. Yeah.
Personally, I would shop in both areas if they're both appealing. And then just, again, it comes down to the deal. If you find
Yeah.
one deal there and it works out well, you buy that one.
You know what, though? Everybody says the floor plan matters.
Yeah.
But you know when that doesn't really matter? When it's 430 square feet.
Yeah. Probably matters more. I mean, you got
There's no
gotta
wasted
really make use
There's
of that
no wasted
space.
space here.
Yeah.
Okay, we're getting down to the wire. We got 34 people watching. I think we're at our new high. So welcome everybody. Jen Lucille has a question that I really felt like was going to come up, but this is actually a little bit more specific. Still interested to hear downtown New West or downtown Vancouver, 500K, large one bedder or studio. But Jen says, how concerned should we be about condo insurance rising? Will the costs be transferred to renters or most likely the landlords?
landlords.
Landlords. I think that's pretty much
You should be
dead on.
concerned. I think you should honestly be really concerned about this. Your realtor should really talk about what's happening and what
your insurance
could
broker.
Yeah, everybody should be really, really telling you all this information about how this will affect things. It's a big deal.
I'm shocked that it's not like I said on the program last time. I sold 2 condos last week where people would likely have to be in a position of self-insuring, and it never came up. So I'm just wondering if
No, but it's been I feel like it's been a bit of a slow burn story, and it's just kind of
I
hitting
think you
that.
need to be aware of it.
I feel
sure.
like it's going to be a bigger story 6 months from now than it will be.
You want to check, if you're considering a house or a condo or strata, any strata, you really want to check the insurance documents, the certificate, when the renewal is. You need all that information.
And the claims history.
And the big
all
thing,
that stuff,
The big thing is the water deductible typically.
Mm-hmm. Well, one of the things I was talking about with apartment blocks, their insurance are not going up. Well, they're going up a little bit, but not nearly like strata.
Yeah.
It's because they don't have claims. So like these big players will come in and build all these apartments and just rent them out. And they if there's a water damage, they go in there and fix it. So no claims, little bit of insurance. So when you're thinking about it as an investment, you're going to be competing against big apartment blocks, which won't have that burden of these high premiums. So it's tougher to make the cash flow work because your expenses are higher than say theirs are.
Right.
So you got to factor in everything.
Irabella SA says insurance tripled, strata fees up 25% in her building.
Yeah,
Not-
that's
not surprising.
Not even close to the worst I've heard.
Yeah. Absolutely. Yeah.
Not that she's lucky, but it can be a big problem.
Well, we've seen Canvas is a building that just went through an assessment to catch up on this year's premium increase.
Yeah.
So now you're really not buying, Matt.
Well, you also it's
Don't
also
name names at them.
but it also makes a difference on the type of building you buy.
Right.
Like I have a strata as well, and mine didn't go up nearly as much because it's townhouses.
Yeah.
And it's not
Well,
going
the
to do
risk,
too much
right?
damage.
Yeah, the
right?
risk
Or
isn't there.
low to mid-rise. I think
Yeah.
ours went up. It actually ended up going up about 30 or 40%, which is still a
Yeah.
pretty substantial increase.
Similar to mine.
But it went up from 25 grand to like 35 grand or whatever. Right.
Right.
So it's marginal because it's not a tower.
So we got 32 people watching. Thanks so much for coming, guys. We have DSO. I recognize DSO from other episodes as well. He's got a question for you. But just before we get to that, thanks so much, everybody, for coming. We'd appreciate a like or subscribe if you're enjoying what you're seeing here tonight. DSO says, Strata Insurance. Do you think it's actually attributed to the higher risk to the insurer? Now, we've talked off camera about this, Mark. There are really only 3 major players. Would more competition or government intervention be needed? You have some very, very strong thoughts on this.
Well, there used to be, 10, I think, around, roughly. A couple of years ago, it was quite a soft market for insurance, meaning you had a lot of choices, you can shop around.
Right.
And they've chosen to leave. So now there's 2 or 3 left. So you really cannot shop, and you're stuck dealing with them. Eventually, it's going to go on the side of the insurers. The insurers are basically training strata councils not to make claims. Mm-hmm. They're jacking rates. True. They're offering less services. So they're jacking rates and they're offering less. That's a phenomenal business to be in for them. So this will continue, and other people who've left, if they see what kind of profit margins the existing stratas, who basically have a stranglehold on these strata councils, are doing, then eventually they'll come back.
Right.
So it's going to take time, and it's not going to happen overnight. But I imagine over the next couple of years, you'll start seeing more players going in as you see that these people are making that much money. That's usually how the market works. Whether the government comes in or not, I really doubt they have an appetite for it. I mean, after everything that's happened with ICBC and essentially what would happen? The government would still have to do market rates. They're not going to give a discount. Otherwise, they're taking on way too much risk.
Yeah.
So I don't see it being not the knight in shining armor to come save this issue. I think the market will have to save itself. Who knows though? Yeah. We'll see.
Yeah. And if your premium or your deductibles have gone up recently, check with Sonnet and Square One. They're both online providers. Apparently they are still insuring condo owners for higher deductibles to the tune of around $500,000. So check with those companies because you still might be in a position where you can insure yourself.
Yeah, that's always a position you want to be in.
Scary stuff.
Yeah.
Dale writes, heard from developer client to watch for steel frame builds in near future given insurance savings.
I don't know about that, but the one thing, and I don't know, I'm not saying that he's wrong or anything. I imagine it will change the way industry works. Totally. Like I just had a fire drill in my building. So I'm in the Scotia Tower, my business building. Mm-hmm. And for me to do my fire drill, I had to go from the 19th floor to the 15th floor because they're all partitioned. They're all safeguarded.
Yeah.
So the reason they do that is for safety, so that no one has to all leave at the same time. So I imagine if it's risk-based and new developers start seeing that, they can get a bigger break or they start marketing that way, just like anything else, whether they're green or cheaper insurance. I could see developers actually changing the way they build buildings to actually do it that way so that they can save on insurance.
It's going to be interesting though, right?
Because 100% going to happen.
Yeah,
we're going to get better buildings out of this, I think.
But with construction costs being so high right now,
they're going to wood.
But it gives you a marketing advantage, right? I mean, like that. If this becomes a huge consumer concern, and you can market a building with superior plumbing or with the right safeguards between floors or whatever, right? It gives buyers that confidence that they're not going to have to self-insure.
Well, it gives insurers that confidence.
And insurers that confidence.
Just like they'll charge you less insurance if you have a sprinkler system or alarms or whatever, right?
It would be smart to move to that. I think the cost benefit is there, right?
I think we've been doing this for an hour. Still 29 people, 30 people in the room. Jen Lucille, by the way, great job on the podcast, guys. I listen to every episode.
Oh, nice.
Maybe that's a nice way to end this.
Well, I don't know if we can end it, Matt. I think it rolls out on its own. Are we winding down, Ramey? Is this pretty much the end?
Up to you guys.
Secret.
An hour, but we're still listening.
Well, no. Thanks everybody for coming out. And any final thoughts, Mark?
Words of wisdom.
I don't know. Take action.
Take action.
Analysis by paralysis is the worst thing an investor could do. You just got to take action, make a lot of offers, and don't be afraid of rejection.
I love that coming from a risk management guy too.
I was just gonna say that.
That's the best. The worst thing you can do is nothing, right?
Absolutely, yeah. You stand still. Like your goals are over there. If you're standing still,
and if you're standing still, you're actually falling behind. said my motivational poster in grade 7.
But I mean, it is true though, right? Because listening to you, Mark, the diligence you do, the way that you're, the kind of thoughtful analysis, it's enough to paralyze you, and yet you're very active in the market.
There's always a reason not to do things.
Yeah.
Like not to get married, not to have kids. Those are big risks.
Yeah,
You still
sure.
do them, right? On the investment side, if you really want to reach your goals, you got to take risks. You just got to be smart about it.
Yeah.
Limit your downside, but don't just do nothing. You're not going to get anywhere.
Leave it there.
Leave it there. There's 28 people. We're at 62 minutes.
We've got an absolute great episode coming out tonight on the podcast. We got Tom Davidoff is back, associate professor at UBC Sauder School of Business. This is a great episode, so that should be coming out later on tonight. Thanks everybody for tuning in.
And thanks, Garrett. He says he's going to reach out about a mortgage broker recommendation. Also love the pod. Fantastic.
Awesome.
Vegan Kev, this is as much your show as anyone's. Thanks, guys. Hoping to make the next one. Right on.
I can't wait. I'm gonna be. It's gonna be plant-based secret next time. Right? Maybe.
All right. Take care.
Take care, guys.
Cheers.